Hey, this video is brought to you by me. My courses on building your wealth are linked down below, where you can learn everything from tax benefits to investing with an LLC or not using an LLC, insurances, how to negotiate with real estate agents and vendors and contractors, or even your boss. Build more wealth by understanding the perspective of what you're not taught in school. All linked down below, extremely affordable prices, and you can now use the St. Patty's coupon linked below. Well, Mr. Joe Biden has more tax plans to try to avoid a debt ceiling, along with updates on housing, Apple. We've got COVID and research labs, yield curves to talk about, Federal Reserve updates, and much more. Joe Biden is apparently now proposing a 25% minimum tax on a billionaire's income. He's also proposing doubling the capital gains tax rate to 39.6% from 20%, basically to raise incomes on those who only receive income through capital gains. Remember, if you're paying somewhere, let's say you make at your job somewhere around $200,000, which is fantastic, you might be paying somewhere around 37% in taxes on sort of the last dollars that you're earning. And that is quite different from somebody potentially receiving $1 million in long-term capital gains from a stock they held and only paying 20% in federal taxes. So Biden is doubling down on this idea, which was a campaign promise of his as well, part of his Build Back Better economic package. Personally, I hate to say it, but I think a lot of Joe Biden's plans right now are really just clickbait for debt ceiling negotiations. That is, how ludicrous of ideas can the Democratic Party throw out in front of the mainstream media to pick up so that Republicans can have a heart attack and shout back at those. And potentially the idea is, hey, well, we'll negotiate with you on the debt ceiling. Just pull back on a lot of these things. I don't think Republicans will end up being fooled, though. They know they have control over the House. So a lot of these proposals from Joe Biden, I think, are really just nothing burgers. But obviously, this is all just prepping for what's expected to be a somewhat intense debt ceiling raising debate, probably somewhere close to our X date, since Congress always does everything last minute, somewhere around June. Regarding housing, a lot of talk about the next wave of housing pain coming. Now, it's probably slightly too early to tell right now, but we do know that when we look at the 10-year Treasury yield and it's hovering around 4% again today, we expect that brief fall to about 3.37% on 10-year Treasury yields will end up proving to be a slight anomaly right around the beginning of the year when inventory is usually at its lowest. That could potentially lead to a short-term bump in real estate prices, but I expect we're just setting up for the next leg down. A lot of talk as well about people being in quote-unquote stuck, and no, not in the sort of step-bro, step-sis manner, but instead parents and children stuck in either homes that they own right now or children not able to move out and form their own households because interest rates are so expensive, and people feel handcuffed to the lower interest rates that they have. After all, interest rates more than doubled from a low of around 2.5% for a 30-year fixed-rate mortgage. Paycord, or I should rephrase this, a subscriber loss for people cutting the cord, the cable cord, apparently is expected to hit 6 million this year. That is, 6 million people are expecting to cut the cord with their cable providers or potentially satellite providers as well, versus 2022, where we had about 5.2 million cut the cord, so to speak. That sets up for about another 7 to 8% erosion versus 6% in 22, 4 to 5% in 2021. Remember, ARK Invest has a thesis that a lot of this cutting will actually be a big boon to companies like Trade Desk, which personally I have an exposure to and I agree with. Now, it is making a lot of companies, especially companies like even Dish TV, look like potential value opportunities. However, you have to be very careful. When we are in innovative times, it is very common to look at value companies and end up with a value trap. That is very dangerous, where something looks like it's trading for a very low multiple compared to its cash flow, but it's actually trending on the way to bankruptcy. Now, what's remarkable is if you go back to the days of Warren Buffett and Benjamin Graham in the 1950s, in my opinion, because innovation took longer, you had more time to sort of milk the cigar butt of value stocks and trade in and out of them, right? I think there is more risk doing that today, given how quickly the innovation cycle moves. Some are now arguing that artificial intelligence could essentially be Moore's lawing or doubling in its capacity. Every 6 weeks, now it's possibly true because we're so early in the artificial intelligence cycle, and it's almost easy to double the capabilities of artificial intelligence right now. But these are just also potentially extreme estimates, but they're really just to make the point that be careful if you're looking at companies that look like value plays. I think there are a lot of value traps out there. Right now. And there are a lot of companies that look phenomenal with leftover cash flow and potentially high dividends, but do consider their staying power. So Bloomberg actually went as far as calling TV a melting ice cube, and that TV defections may slow, but now with YouTube offering NFL Sunday tickets, losses could actually intensify. So slight talking out of both sides of their mouth there. Now, another thing that I thought was very interesting is yesterday somebody railed on me for having Apple AirPods. Usually I just have sort of a little one in, but I'm traveling right now, and this is what I have. I was wondering, why do people hate on the Apple audio devices? These are actually pretty remarkable. I used to wear headphones all the time, and generally after wearing headphones for a long period of time, like if you watch my January 6th coverage where I wore a broken sort of Beats set of headphones for 10 hours, and then there were a bunch of you subscribers who were actually so nice. You ended up sending me replacement headphones. That was really cool. I think there were like 4 of you who did it at the same time. Some really awesome Bose, some other Beats. I mean, phenomenal. Y'all are so wonderful and nice. What I found though with my original Beats is they would hurt my head after a while. Because the band is a hard plastic. Here you have this mesh fiber, and I could almost wear these all day long without even feeling them, or go on a run or whatever. If you go running with them, obviously this stuff gets a little schwitzig, so you might want to replace that over time. But anyway, so I was wondering why is there hate for these? And then I also at the same time picked up on this another Bloomberg piece. Actually, this was a Bloomberg intelligence piece, and they were talking about how Apple AirPods could actually become Apple's third most important product. There is now analysis that the audio accessory department at Apple could end up hitting $22 billion by 2023, 14% above consensus, with 62% of Gen Z owning AirPods. Now, if there are multiple different kinds of AirPods, you know, the little things that are in your ears that always fall out. I can never keep the little white things in. They always fall out. So I prefer the larger ones, but then again, these are a little harder to travel with. But anyway, AirPod average selling prices right now in 2022 sit at about $181. That's $24 actually less than what we saw in 2021. However, we expect to get those ASPs back to around $200, especially with the Maxes. And sales for AirPods could eventually end up surpassing iPad sales. I personally thought that projection was insane because, I mean, after all, these are like $500. The other ones are like, what, $250? But iPads, I mean, the cheapest iPad's, what, $349 right now for sort of the old school iPad? I mean, maybe, I suppose. Actually, now that I think about it, if the cheapest iPad's around $349, that makes this more expensive than the cheapest iPad. That's insane. The iPad mini sits, what, $500-$600? If you get the iPad Pro, maybe that's where my head is. The iPad Pro, which I generally prefer, which is what I'm using right now, this thing's like $1,500 once you're looking at, LTE and a little bit of a storage upgrade. But then again, not everybody's going to be getting the iPad Pro, so maybe. It's actually a very interesting idea. And personally, I love Apple. It's one of a company that I have a large exposure to. But one of the fascinating things to me about Apple as well is their ability to consistently come up with a new product vertical that, like, for example, the audio department, that ends up becoming some remarkably incredible revenue driver, like Bloomberg is arguing here. So phenomenal. And Apple's got insane margins. So personally, when it comes to, let's say, VR headsets, I know there are a lot of people who are very excited about Meta, Facebook. However, they just dropped their prices because their products are not selling. So there are, Mark Zuck's having to drop prices for his 3D headset. And I wouldn't actually be surprised if Apple ends up coming out with a substantially better product It is expected to come out later this year, more expensive, somewhere around $3,000 per headset. I think that's a little extreme. I think it's going to be a little bit more of a sort of, dare I say, a luxury item, but maybe one of those things where it's like cool to buy, but then you don't really use it that much. If Apple can figure out how to get people to actually use virtual reality more often, whew, that could actually end up being a huge other vertical for Apple. I personally wouldn't price it into my fundamental analysis, but I would consider it icing on the cake. I consider that sort of a margin of safety for some of these phenomenal companies. It's kind of like how I try not to price in things like, an Optimus robot or whatever other crazy revenues that could potentially come to Tesla. Those are more just icing on the cake. And another topic that was somewhat interesting here is that on biosafety labs, there are 69 biosafety level 4 labs in the world. Level 4 lab is very similar. Well, it's basically the level of laboratory that the Wuhan Institute of Virology is and was. There are 69 of these facilities in the world. And there's a lot of talk right now about how these level 4 labs actually cost somewhere around $1.25 billion to build. But there are 15 different organizations that advise on biosafety, but none of them actually have the authority to set standards, safety standards for any of these biosafety labs. And so there's a lot of talk now about how lab leaks are potentially totally possible for COVID because there's no one regulatory body saying, hey, here's how to regulate safety for biosafety labs. They're basically self-policing. Kind of crazy. Regarding the yield curve, there's obviously a significant yield curve inversion right now. Some say that's because of the Federal Reserve's dot plot. Others say it's just a straight-up harbinger of a recession coming. 10-year Treasury yield now at 4%, and the 2-year sitting over 5%. That is a spread of over 100 basis points, which is very similar to the Volcker era, I should say, which is where we last had an inversion, the depth exceeding 100 basis points. That's 1 full percent. Policy rates, of course, right now haven't even hit 5% yet, so maybe some more work to be done. Jerome Powell also testified in the Fed yesterday, touching on a 2% target, talking about, again, no reason to change it, how it's the global standard, inflation is everywhere. Swaps now pricing in a 5.65% terminal rate. However, Jerome Powell yesterday did sort of walk back some of the ideas that 50 basis points was already decided. He said, we have not decided yet what to do regarding 25 or 50 basis points at the next meeting on the 22nd. That's probably because we're waiting for the jobs data to come out tomorrow. Jobs data obviously comes out tomorrow, so stay tuned for that. That jobs data tomorrow will be one of two of the big catalysts that we're waiting for leading up to the FOMC meeting on the 26th. So pretty excited about that jobs data coming out tomorrow. There's a little bit of talk as well about racial gaps on unemployment. Jerome Powell talking about how that's somewhat structural, and he's not exactly sure why. Talks a little bit about making progress on CBDCs and how housing is really constrained by zoning in many areas, and there's little the Fed can do about zoning. Yeah, no kidding. Tell me about California. Zoning in California is just, honestly, I think quite mentally stupid. You, on one hand, I'll just give you a quick example because it's always fun to rant on California, and I'm allowed to do that because, well, I ran for governor in California, and I tried to bring logic and plans. I don't know, I came in second out of recall candidates. I guess logic doesn't work too well in politics. But anyway, let me give you an example of not logic. The state of California says, hey, we want everybody to be able to convert their garage into an ADU. Well, guess what? Which is an accessory dwelling unit, like a little apartment. Well, guess what most cities are now saying? Well, we'll let you do ADUs as long as they're not in a high fire area. Oh, okay. Where are the high fire areas? Oh, here's the map. Oh, that's the entire city. Exactly. It's so stupid. It's like, oh, I politics just drives me nuts. But I've just resigned to laugh about it. I love covering politics because it's so ridiculous, but I also try to find sort of the truth as much as possible, and that's challenging in politics. But anyway,